Kirk Duckwell here with Mastermind the Market, your real estate stats update for the Twin Cities area. Well, rates went up, and they also went down. What do I mean by that? Well, many of you may have heard the Fed raised interest rates by 3/4 of a point. However, the mortgage market went down when that news came out the other day. So why is that? Well, the mortgage markets are not directly tied to the Fed interest rate. Mortgage markets tend to actually act a little before that Fed rate change ever happens. So let's dive into the data and take a look at some of the driving factors out there. All right, one of my favorite websites to use, Fred Economic Data. So I pulled up 3 different data sets here. The red line is mortgage rates. The green line is the 10-year Treasury yield, which we'll talk about in a second. And the blue line down on the bottom is the Fed rate. And we can actually see right in this area here that the mortgage rates back in February of 2021 started to move up in advance of the rates, Fed rates. And Fed rate kind of stayed stable for a while and then started to tick back up as we got into February. But again, our rates were moving before that time frame on the upward trajectory. So what we are seeing now with this hike of 3/4 of a point, well, our market already baked that in back here. So it's almost a little bit of an easing, kind of more adjusting appropriately. So yeah, we saw mortgage interest rates drop back when that spike happened. And if we look at the rates today, so yeah, there's the announcement. You can see the 10-year Treasury yield drops right off. So going back to the Fed, you can see that 10-year Treasury yield tends to follow much closer with what's going to happen with mortgage interest rates. So as we saw that yield drop off, we've seen mortgage rates go down. Some interesting data there on where rates are at today. So looking at the Freddie Mac site, primary mortgage market survey, 5.3 is where rates are at with a point buy down. However, from our resident mortgage geek, Chad Preby at Bell Bank, today they're seeing rates at 5.125, no points being paid. 15-year mortgage at 4.625. 7-year ARM at 4.49 and 10-year ARM at 4.625. So it's likely that we're going to see rates maybe kind of come down a little bit more and level off until we kind of see where things go with inflation over the next few months. All right, looking at some other real estate stats here. New listings into the marketplace jumped up week over a week, 1,504 up to 1,750. I do expect that to start to drop back, though. As I mentioned, we're kind of approaching that time of year of peak inventory. Pending sales jumped up from 947 up to 1,097. And inventory of homes still on the rise, 187 up to 8441. This is up by 10.1% over the same time last year. Some other notable data points out there. Showings per listing per week. Median sale price 250 to 500K, Minneapolis, St. Paul area. So this is the average number of showings that are taking place on the average price home out there, or median price home out there. So 3.93 is what we are seeing. That is down just ever so slightly from the week before. That is tracking behind last year by 17%. Total number of showings down a little bit as well, 3,520 down to 3,481. So one other notable point here, jump on days on market. Usually it takes a few weeks of data here to kind of get a better sense of, well, is this really where it's trending, or is it going to come back a little bit? Because we can see that move up and down, like back at this time frame where it went from a 13 up to 60 and then back down to a 14. We can see the overall long-term trend is moving up. So it was at a 16.2 days on market up to a 22.7. Market meter is currently at a 5.57. So where is that on our market meter scale? Yeah, right in here, balanced market range. So for buyers out there, this is a good time. Peak inventory is mentioned. Market's a lot slower than it was a few months ago. For sellers out there, it's a balanced market, right? So you're probably going to get close to list price. If you're on the market a little while, you might have to come down a little bit. I would say the preferred strategy right now is to price into the market versus trying to price back where the market was. So make sure you're looking at that showings per listing activity with your agent before picking that price. Hopefully you found this information valuable. As always, please feel free to reach out with any questions. Take care, be safe, and have a great week.